The study investigates the obstacles experienced by the Malaysian government in the process of adopting the management accounting reporting, which functions as a public sector modernization tool to provide certainty in service delivery, accountability, and public value. Therefore, the Malaysian government implemented the management accounting reporting through the Accountant General's Department of Malaysia (AGD) to ensure the effectiveness of management in financing the public sector. Although AGD is undergoing an institutional transformation, the challenges in implementing management accounting reporting may differ because management accounting frameworks and standards do not fully align with financial accounting reporting standards, tools, and techniques. Therefore, implementation issues are expected to vary in both contexts and practices. This study identifies substantial implementation barriers that can be categorized into three majors, including cognitive, technical, and organizational. This study uses a qualitative approach where interviews with both accountants and non-accountants within two ministries and the Accountant General's Department of Malaysia (AGD) were conducted. This study also reviewed 10 documentaries related to management accounting, including implementation guidelines, terms of reference, annual reports, instructions, and blueprint were also analyzed thematically by determining the similarities and differences to ensure a more holistic perspective and its reliability and validity by triangulation process.
Management accounting plays an important role in improving efficiency, accountability, and decision-making in public organizations. The main practices include budgeting and performance measurement, costing practices such as activity-based costing, and financial as well as risk analysis. Among these, budgeting and performance measurement are the most widely used because they help organizations plan resources and monitor performance effectively. However, there are several barriers to implementing these practices. First, cognitive barriers occur when employees lack understanding and resist changes in management accounting system. Second, organization barrier includes poor coordination between departments and lack of support from top management. And lastly, technical barriers involve outdated IT system and difficulties in creating suitable performance indicators.
Hi, Assalamualaikum. Now we are looking at the institutionalization of the SMART framework under Treasury Circular PS 1.3. While it promises a shift towards strategic management, the reality is that SMART is still in its infancy and highly vulnerable. While the government has disseminated guidelines for financial statement analysis and costing, we are still missing the detailed guidelines for resources analysis and performance measurement because half of the pillars are effectively missing from public view. So the framework cannot be fully realized. We are operating in a nascent stage where the foundation is simply incomplete. This structural delay is further compounded by a cultural hurdle, the historical reporter mindset. Many public officers still view accounting as mere back-end data entry. Transitioning to management accounting requires judgment, creativity, and a strategic thinking. Shifting staff from a standard-driven environment to this unstructured, analytically work has created a distinct competency gap and a drop in work motivation. To make matters even worse, our national budgetary philosophy creates a weak incentive structure. The priority is often budgetary volume over cost efficiency. Teams deliberately create budgetary slack because failing to exhaust allocated funds means facing subsequent budget cuts. When the goal is simply to spend to avoid penalties, true cost efficiency becomes secondary, stalling our strategic evolution. To truly evolve, we must bridge these guidelines gaps and realign our budgetary incentives.
Implementing management accounting in the Malaysian public sector is difficult because of how the organizations are set up. First, complicated structure. The government has many levels and branches, which makes it very hard for information to flow smoothly from the bottom to the top. Second, too much data to collect. It is a huge job to gather information from thousands of small offices like local clinics and hospitals and get it to the main headquarters on time. Third, information get lost as data is passed up the chain and simplified for big report. The original meaning or important detail can be lost in translation. Next, lack of teamwork. Different departments like finance and strategic planning often work separately. They do not always share information or work together well, which is necessary for this report. Next, lack of special skill. Many staff members have not been given enough training to understand the complex costs and strategies needed for this new report. Next, hard to measure success. It is difficult for employees to figure out how to put a number or a measurement on the success of public program.
Alright, I will explain about technical barriers. So, a technical barrier isn't just a broken computer, it is anything in the system that slows down the progress. In this study, it is divided into hardware, which is the physical tech, and software, the application like my course. If these are not optimized, the organization cannot achieve its strategic goals, which is smart reporting. So, the first one is the my course calibration burden. The system is too broad and lacks of specific standards operating procedures, which is SOPs, because my course doesn't have any plug-and-play steps for every unit ministry, which accountants have to manually calibrate it. They have to get creative to make the number fits, which is incredibly time-consuming. The second one is system fragmentation, data silos. Different departments, PTJ, use different non-integrated systems. So, there is no single source of truth. If an accountant needs data for a report, they have to manually extract it from one system and move it to another. This leads to data duplication and high risk of error. Next is the rules and guidelines paradox. There is a disagreement between the policymakers, which is SED, and also the preparers, which is accountants. The accountants want a generic template to follow, so they know exactly what to do, but the AJD wants guidelines to be broad and flexible, so ministries can adapt. The conflict here is because the guidelines are seen as too general, so accountants feel unguided, leading to superficial reporting. Next is the competency gaps. Technical barriers are worsened by a lack of specialist experience. Even if the software was perfect, many accountants lack the technical experience in specialized costing components. Being told to be creative with costing becomes a burden rather than an opportunity because they have not been trained for the specific level of technical analysis.
The purpose of the creation of management accounting is to assist leaders of government in making better decisions. However, management accounting has three major obstacles to overcome: how people think, lack of organization within government offices, and insufficient technology. In order to improve this issue, the government must establish communication with staff members to demonstrate the value of reporting information, also assist in increasing cooperation between departments, simplify the cumbersome amount of paperwork generated, and provide funding for the acquisition of new technology. Through improvement of this issue, the government will be using improved information for making better decisions for the benefit of all citizens.